Okay, I'm going to talk about taxes. I'm going to talk about taxes, and I'm just going to talk through a tax return and things you want to look out for. Obviously, I mentioned before I do taxes, like 200 individual, 400 corporate, nationwide. You can call me, text me, take a picture of your tax form and text them to me, 865-730-0272. Find me, Barnett, BARNETTE-CPA.com, and get my services that way. Pay me with Bitcoin, PayPal, whatever. But I'm just going to talk you through a tax return, and like a lot of people make a lot of mistakes, and I'm going to tell you some funny stuff. I'm going to tell you some aggressive ways to make a lot more money, especially if you're a single mother and in the low income brackets, or father in the single parent in the low income brackets. And that's the main thing I'm going to focus on here. I'll focus on like a little bit of small business, but I covered that more in my other video anyway. And just some other kind of things to look out for when it comes to tax prep that people who prepare their taxes. I'd say taxes used to be so complicated, the average person would lose out on like $1,000 easily if they prepared themselves, even with TurboTax, because TurboTax doesn't maximize your deductions. All it does is get you through the forms, and people really underestimate, like, if you pay $1,000 more than your tax than you needed to, then you kind of, like, even if the software was free, you sort of paid $1,000 for that software. But it's always a gamble whether or not I can make you more money or not. So, and you won't know until after it's done. So there you are. So I'll give you one example of something that people miss out on. If you're a single parent, it can be two parents too. I'm just using the example of a single parent. This is where it comes up the most. You're a single parent and you have a job. It's critical with this scenario that both of you have a job. And even if one of you doesn't have a job, I'm going to tell you the whole complicated story on how to make it work with two parents too. It's awesome. It's awesome. It's awesome. Okay, so yeah, let me give you this scenario, right? One spouse makes $100,000. The other spouse stays at home, doing whatever, and grandmom watches the baby, and the baby is younger than 12. And if you file taxes normally, you're gonna miss out on some money unless you want to get crazy. And so how do you get crazy? So to get crazy, you and you're incurring costs. You're like helping with grandmom, she's watching baby. So grandmom, like you're incurring the cost of grandmom, but you get a $500 tax benefit, which is nothing worthwhile, really. And then, anyways, so what you do is the guy who makes 100, he hires the spouse. The spouse starts her own business, and I'll just use any example, but I'll just say she sells handbags, whatever. And she sells handbags online for she makes $3,000 doing this for the year, and her net profit doesn't really matter, but her net profit might be $500 after some expenses. Any business that you want to say, it doesn't really matter, small little business. And then now the spouse is working because she has her own little business that she runs, no matter how small it is. And then maybe she gives people life coaching advice, and she gets $100 for this. I don't know if there's some limit. Maybe you have to make over 1,000, but it's pretty easy to do that. So then now both the parents are working. We took care of that. Now the second step is grandmom, the babysitter, who you don't feel like you pay. You give her room and board, but now you pay her. Now you take the grandmom and you say that you pay her $6,000 worth of room and board costs. Now that's called childcare. Now, when grandmom files her taxes, $6,000 isn't enough to where she'll have to pay any money on any of that, or she'll have to pay very little money on that. She might have to pay $500, but it'll probably be zero when it's all said and done for her child care services to you. Now, she needs to report it. When she files her taxes, she has to do it correct and record the room and board, etc., child care benefits of $6,000. And the wife who's previously a homemaker and she just left off the $1,000 she made doing her own little business, she has to report that too. And now both the parents are working, grandmom is doing your child care. And now, and she's recording it and you're gonna file it on your taxes. Now you do the $6,000 child care, put that associated with your child, and you're gonna get a tax credit of $2,000. You're gonna get a tax credit of $2,000. And now things all said and done, because both of those people would probably pay nothing on those things that I just mentioned. So they have no extra taxes doing things the right way. And you get $2,000 more on your taxes by doing things the right way. But if you do things the easiest way, then you pay $2,000 more than you have to. And that's just something that a lot of people will just refuse to do the extra work because they do taxes themselves. It's so intimidating. But if you do it the right way, you get $2,000 more. And you need someone intelligent like myself in order to understand the real scope of the situation. Because if they just listen to what you have to say, you're like, oh, we don't pay for a babysitter. Well, you have grandmom and you're paying room and board, so you're paying for a babysitter. And then they'll also say, well, I don't want grandmom to have to worry about her taxes. And like, well, I file grandmom's taxes and you're gonna make $2,000. You're gonna end up paying me $400 for both tax returns when it's said and done. You'll still come out ahead $1,500 profit every single year that you have that kid who's under 12. And and you double that for if you have 2 or 3 kids under 12, then now you're making $4,000 more, $3,000 more by hiring me per kid, So that's just the common way that people mess up on when they do their taxes. And then that's for your single mothers or parents. It works with 2 parents, but you see it most often with single parents. And but you got to share videos like this with them because I'm the only one who's going to tell you about all this. So now let's think of it another way that people mess up is when they get a 1099. I talked about this some in another video, but I'll just kind of go over it here. So you get a 1099 and you that's when you're like a Uber driver or something like that, or you're a contractor, you're not an employee. 1099 means you have to file a sole proprietorship. And if you are a 1099 type person, go ahead and try to register an EIN. You can do that at irs.gov, EIN, Google it. It's not too terribly complicated, or you can talk to me about it. And that way you're not giving your social to everybody. So you get your 1099 and you want to record your home office expense. Literally everyone has a home office. They have an office somewhere. So you'll always have an office no matter what. So if you're not paying for an office, once you start paying for an office, maybe you don't have a home office, but maybe you still do. Most still do. So you take your home office expense. That's going to be like the simplified one is the one I mostly recommend. I'm not a person who really recommends the crazy home office, but it can be profitable. But the simplified home office, that's going to save you like $800 right there. You take your car miles. You take your meals. Take your meal deduction. So now they changed the rules on the meals. I'll have to review that before I really talk about it too much. But it might be common to have like $3,000 in meal expense related to your business, where you're promoting your business or discussing your business while you eat a meal. And that might, commonly be about $3,000 a year. Your business miles, car miles might commonly be like 3,000, 5,000 miles, or if you're an Uber driver, it's going to be like 20,000 or something. But those are some common deductions that people just miss. And then you can deduct your laundry expenses, your dry cleaning bill, depending on the type of business you do. You cannot deduct clothes. Everybody tries to do that. Don't do that. Stupid. Unless your clothes have your business name on them, or they're kind of like protective gear, like a fireman's coat. That's different. But like suits and all that, you don't deduct. And then let me think of some, contract labor. A lot of people mess up on this. Like, you give somebody like $20, $50, $100 to help you out. That's your contract labor. A lot of people might have $500, $1,500 of like little miscellaneous money that they paid people throughout the year, and they forget about it, And you don't have to file any paperwork until you pay somebody over $600. So if you pay them less than $600, there's no paperwork trail that you really have to worry about, other than you're supposed to keep records for your accounting. But it's frankly just not that big of an issue. But again, contact me if you need to like issue people 1099s for your contractors. And then you rarely want W-2. Unless you got 3 employee type people, you'll start doing the W-2. But if you have 1 or 2 people and you're paying them like $3,000 or less a year, you really want to try to kit with the 1099. Now, some states have made it illegal to do contract labor. Like California has basically made it illegal to get contract labor. And a lot of people don't know why that's happening, but it's because contract labor actually pays no taxes whatsoever usually, if it's like $3,000, $5,000. And so Uber drivers don't pay any tax whatsoever. Lyft drivers don't pay any tax. Musicians who make like $5,000 or less a year as a contractor won't end up paying any taxes. And so California wants to tax these people, and that's why they're calling them employees. And as an employee now, you can no longer deduct any expenses related to that form of employment. So an Uber driver who's a W-2 cannot deduct his miles that he drives on his car as a business expense. And basically, you'll make like a third as much money in California as an Uber driver as you will in like other states where you're still allowed to be a contractor. So let me just think any other Schedule C. It's called a Schedule C sole proprietorship type of expenses that people commonly leave off. Babysitters are also like a Schedule C person, but like grandmom in the previous scenario. Give me a second. Oh, your charitable donations are not really a deduction, but if you use it for advertising purposes, then that's sort of okay. Because advertising can be very random. Like rich folk will deduct a boat for advertising, and they'll just throw their name of their business on the side of the boat, and they'll call that advertising. That's really common. Like some rich people, like I have a contractor who does construction. I don't have it, but a CPA firm I worked at previously did. It's a contractor who makes about $1 million a year in Memphis, and he has a fishing boat team in Florida with the name of his business on the side of the boat, and he has like $200,000 of expenses managing this fishing boat team, which he clearly does for fun, but he deducts it all as an advertising expense for the business in Memphis, Tennessee, and they have nothing to do with one another. But that's how like liberal advertising expenses have been in the past. I don't know if it's still that way. I won't allow anybody to do that, but some people do. And then, but charitable donations can often be advertising. I'm comfortable with that, and they're usually $500 to $1,000, you know. Let's see here. Working through it. You know, you have your little office furniture that maybe your house has office furniture, and you start to use it for business. Now you get a deduction for that, like computer, the desk, and so forth. A lot of people forget about that because they're like, you already paid for it, but now it's converted over to business, so now it's deductible, even though you're not buying it new. Even used office furniture is now business. Now, a lot of people try to do actual card deduction. You'll actually almost never do that. And it's the most annoying thing when I see people do it, and it's usually the stupidest thing. And accountants who push this issue, unless you're buying a Mercedes, you don't want to do an actual car expense. Sometimes with cars that need a lot of repair, it can be useful, but even then. If you're a truck driver, like long haul truck driver, semi-truck driver, then you do actual car expense. If you're a tow truck driver or you drive a concrete truck, then you'll do an actual car expense. By any regular passenger vehicle, you want to do mileage deduction. And if your vehicle gets good miles per gallon, you can like hugely profit. Like if you drive a Tesla 10,000 miles, your actual expenses might run $1,000 an electrical recharge, but the IRS will give you a $5,000 deduction. So you like profit from that very, very, very hugely. And that's why you always do mileage when it comes to passenger vehicle. Let me think of some other stuff real quick. All your dues and subscriptions, sometimes people forget about that. Like if you're a musician and you subscribe to like Musician Weekly, that's a business expense. If you use a piece of software to make your music every now and again and it costs like $500, that's a business expense. A lot of people forget about that. They might be part of musical club group, and the annual dues of that are like $100, and people forget about that, and they're like, oh, I would have done it anyway. But it's all related to making music, so now it's all a music expense. So there you go there. Okay, and now if you're trying to get a mortgage loan and you're self-employed, it's going to be incredibly difficult. It's going to take like 2 or 3 years of making a whole ton of money, paying a whole ton of tax before you'll be able to get any kind of mortgage loan. You're really better just to marry somebody who has a W-2 and just forget about trying to get a mortgage. If you're self-employed, it'll just never happen. Unless you're reporting like $80,000 profit on your Schedule C, which is like $35,000 of tax. Or you can get like 1 month of W-2 income and get a 1 month of W-2 income, and then you can get a mortgage without problem. So it's like 2 years of reporting $80,000 profit on Schedule C, paying a combined of $70,000 in taxes, or find somebody who will issue you a W-2 for a month or two, get a 30-year fixed mortgage, FAA, government secured, quit the job, go back to your Schedule C, keep the mortgage, you're good to go. That's the type of thing you want to think about. A lot of people make things too complicated, or they make things too costly. A little bit more complication can save you tens, 20s, 40s, thousands of dollars. Okay. I'm going to call it there for taxes. Let's see if I got anything else. Partnership. If you're a husband and wife, I'll talk about corps for a second. If you're a husband and wife and you really want both of your names to be on the business, then you have to form a partnership, file a 1065 partnership return. It's not really that complicated. And if it's a big business, it's always worth it, just for auditing reasons. And if you make over $200,000, it's always worth it to separate your business from your personal tax return, so that if you ever get audited, you get audited individually, your corporation gets audited individually, you don't get audited together. So the more complicated your business and your personal, which is about $200,000, you want to separate the two things. Or if you do investments the way I do, then you'll tend to want to separate those things, because you don't really want your sole proprietorship audited because your investments triggered an audit for some reason. So that's something that I see a lot. And one other thing I'll mention that messes up people all the time, with the Roth IRA, you can withdraw all of your contribution for any reason whatsoever, anytime, after your account has been open 5 years. So if your account has been open 5 years and you contributed $20,000 and the balance of your account is $30,000, you can withdraw $20,000 and you pay no penalties, no tax. You can withdraw that $20,000 for just to go party, a trip to Jamaica, and that's fine. But when your taxes are issued to you, the tax forms won't specify the difference. So you have to tell your tax advisor, and when you file TurboTax yourself, you have to correctly say that that $20,000 was from contribution, and then you'll pay zero tax. But the default on the form, the default with all tax software that I've ever used, probably TurboTax as well, is that they will say that that wasn't the case, and they will make you pay about $6,000 more in taxes than you're supposed to if you filed your taxes correctly. It really is obnoxious to me that the forms aren't issued to people correctly, but you have to accept, or at least you'll never know, and I guess the government doesn't care to correct it, but the form as it is issued today, no one would know whether or not it's your contribution, where you pay zero tax from a Roth IRA only after it's been open 5 years, or if it's from the other portion where you're supposed to pay penalties, 10% penalty tax. Now with COVID, I just looked up the rules. You can withdraw if you get a COVID diagnosis, a loss of income. You can withdraw the entirety of your 401k IRA, no 10% penalty on anything, which I did. And I'm so happy I did that. Such a good decision on my part. So you can cash out all your retirement account, no penalty on anything. Now, I think you have 3 years that you have to pay it back, which that's what I'll do. And then you get to spread that income over 3 years as well, if you don't pay it back. And then I think that was the bulk of how the COVID IRA things changed. And now if you don't pay it back in those 3 years, then you recognize it as income and you pay the 10% penalty, I assume. You have till December 31st, 2020 to do this. And it's, if you want Bitcoin if you want to invest the way that I do, then you can't do it through retirement accounts, unfortunately. Unless it's it's difficult. If you got 400K, I can make it happen. But if you got 50K, 40K, it's just not going to happen. And so I went ahead and did that. And I pulled out 50K, whatever, from my little retirement stuffs. And I made 200K in the last 6 months or something doing my investments. And that wouldn't have happened if I didn't do that. And while I hate everything with COVID, ignoring the deaths and all that, obviously, but the way that it's destroyed businesses, I hate that I see all these shops getting closed down, these people having to deal with the stress of finding a new job while dealing with COVID stresses. I hate all that very, very much, but it's happened. There it is. And some people benefited from the stimulus and the PPP loans. I didn't benefit as much, but now I did benefit from cashing out my IRA. So ha 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 ha. So that covers that. So I hope that helps you a little bit. If you like that video, consider supporting my works. BarnettCPA.com for Barnett CPA. I'm in Tennessee, but I can do taxes all across the U.S. You take a picture of your tax forms, text it to 865-730-0272, or you email it to me at barnette.cpa@gmail.com. And I send a test email, a test text before you send your actual forms. You can just ask me, are you a CPA business? And then I'll reply, Barnett CPA, something like that. And you can give me a test question. And then you can send me your sensitive documents, and I'll send them back to you so that you sign them remotely. $200 individual, $400 for corporate partnerships, etc. And I can register your corporations and all that. Make sure that you're not overpaying your taxes. And then you can also support my government, my government project, Bitcoin1776.org. And if you join my little meetup groups, I pay out $500. When you collect enough tokens, you get the tokens. I give you those they're for free for talking with people an hour and discussing financial, technological, health, improving your life type of behaviors, basically. And when you collect enough tokens, I give you $500. And then you can also do my little Patreon and just, send me cash because you feel like it. Support the YouTube channel. Spread this around. I really do appreciate it. I do hope it gets somewhere. You never know. And thank you so much. Let's get on with the hike. Now, we are climbing the trail, which is a little bit more than I anticipated, but I did want to do it. This is going to be about 6 miles when it's all said and done. We have a little bit more privacy here, so I don't mind babbling. And also, we'll get to a mountaintop. So I was kind of jelly. Wanted to get that mountaintop view. All right, and we're in Damascus, West Virginia. The Creeper Trail, I think it's called the Straight Branch Junction. And let's keep going. And I'll kind of gather my thoughts and get my breath again while we hike quietly for a few minutes. Okay, technology. Let's go ahead and cover technology and what's been happening in the world of tech. So